This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks track Wall Street's biggest rally in more than 2 weeks, sentiment boosted by a rebound in U.S. consumer confidence and easing trade tensions. A new chapter for Anglo American Platinum as Amplats demerges to form Valterra. We'll speak to CEO Craig Miller ahead of the new listing on the Johannesburg Stock Exchange. And a fresh setback for SpaceX's Mars vision after its Starship rocket loses control and disintegrates during a test flight. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Quite a busy day already, as we can see. Let's just take a look at where markets are positioned ahead of the trading day. If we take a look at U.S. equity futures right now, appearing to be a bit flat, but as we were mentioning, Tuesday was a strong session after the U.S. and the UK came back from a holiday over the weekend. We actually did see the S&P and the NASDAQ both closing in the green. The NASDAQ closing up more than 2% and the S&P snapping a 4-day losing streak. But as you can see right now, NASDAQ futures a bit unchanged right now. All eyes, though, are on Nvidia's earnings later today. We mentioned that sentiment was supported on Wall Street and across the markets by U.S. consumer confidence. There was also a lift from what we heard from the finance ministry in Japan, giving a lift to global bonds on Tuesday, though that sentiment may change now that we are getting some news about this latest auction. The U.S. 10-year yield right now at 4.46% right about. The dollar advancing right now versus all group of 10 peers, gaining some traction as we see yen, a little bit of yen weakness right now. The dollar up just about 0.1%. And Brent crude also trending higher right now, about 0.5%. We're looking very closely at what is going to happen at that OPEC Plus meeting coming up in just a few days. We'll get some direction about the supply policies, from the group coming up. But right now, Brent crude trading at about $64.41 a barrel. And a quick check at the S&P bounce that we did see. I mentioned there that we saw the indice snapping a 4-day losing streak, also seeing it bouncing off its 200-day moving average. And in doing so, we are seeing that index returning to positive territory on the year. So Tuesday was a good day for the index. We will see what Wednesday portends. Let's cross over, though, to Singapore. And our executive editor for Asia markets, that's Paul Dobson, who's joining us now. Paul, let's just start with that auction that we did get from Japan just a little while ago. Talk to us about how what this is going to mean for global bond markets.
Hi, good morning, Jennifer. There was a lot of attention on today's sale of 40-year Japanese government bonds, given the recent volatility that we've seen in the market. What we saw over the last couple of weeks was a dramatic increase in yields at the back end of the curve. People selling bonds or a lack of demand, particularly from large Japanese investors, to buy into that sell-off that we saw. So there was a lot of tension around today's auction. Would anybody show up? Would there be adequate demand? Now, yesterday we had a little bit of an icebreaker there where we heard that the Japanese authorities were polling market participants on their outlook for supply for the rest of the year. The suggestion or the intimation being that maybe they would reduce the sales at the back end of the yield curve to ease some of those pressures. And the market took that positively with a big rally yesterday that even helped US Treasuries as well. So all of that focus on today's sale. How did it look? Well, demand wasn't super strong. It was the weakest in terms of bid to cover ratio since July of last year. On the other hand, they managed to get it out of the door. There wasn't any huge tantrum immediately, at least, that we saw during the sale or in reaction either. It was a slightly smaller sale than recent auctions that we've seen. It was a slightly higher yield than the market had anticipated going into the sale. And yeah, all things being done, at least it's done and out of the way. And when we were looking at the market reaction immediately afterwards, there didn't seem to be any particularly strong knee-jerk one way or the other. So it seems like the market more or less has so far taken it in stride. Now, the next thing we'll see is will there be any follow-through selling, though, in those yields when the market, the cash market starts to trade again after the lunch break in Japan.
Right. And Paul, will we see this spill over into other assets? Is that something you're paying close attention to?
we are paying close attention to it. So far, we seem to be off the hook. But I do think that, more broadly, there has been a lot of attention paid to what's going on in Asia's fixed income markets, because the concern is that if yields get high enough in Japan, for example, or in Taiwan for that matter, or elsewhere in Asia, it will bring more flows of money back to Asia and away from US Treasury markets, where there has also been an increase in yields over the past, year or so. People worried about inflationary impact of the Trump regime. People worried about a reduction in buyer demand as a result of the tariff policies more generally, and a little bit more of mistrust in the US markets as a result. And, basically the opportunity to put money to work elsewhere around the world. So there are those interconnections between global markets that people are paying attention to, and the risk that, kind of a more of a tantrum in the Japanese government bond market could spill over into international bond markets too.
Thanks so much for starting us off. Executive Editor for Asia Markets, Paul Dobson there. Paul, great to have you. Thanks so much. Now, the demerger of Anglo American's platinum unit, Amplats, is nearing completion. The spinoff begins trading today on the Johannesburg Stock Exchange under the new name Valterra Platinum. The new entity will also have a secondary listing on the London Stock Exchange from next Monday. Anglo American will retain a 19.9% stake in the platinum producer. It's a culmination of Anglo's wider restructuring plans announced last year to fend off an unsolicited $49 billion takeover by BHP Group. Joining us now here in studio is Amplats CEO Craig Miller. He will, of course, become the CEO of Valterra Platinum in just a bit. Craig, great to get you on the show. Thank you so much for being here. Let's just start here. You said in the statement the company, this new company, will assist in building the company's capital markets profile. Talk to us about what this strategy means, or what the strategy looks like moving forward.
Yeah, thanks very much and good morning. The strategy is really predicated on three fundamental things. Operational excellence, really creating sustainable shareholder returns, and really thinking through the fundamentals for the PGM market and how we can create future demand for the products that we mine. And so when I think about operational excellence, that really has been focused around really creating value from the assets that we have within the portfolio. So both our assets here in South Africa and then also in Zimbabwe, so Mogalakwena, Amandelbult, Mototolo and Unki, and really then also the integrated value chain that we have. So we go from mine all the way through to refining, and we believe that given the resource endowment that we have, that we can extract further value from that. And then as a company going forward, we're really focused around value over volume. So really creating that value from the assets and then being incredibly disciplined in our capital allocation. And therefore thinking through superior shareholder returns as we embark on our new journey as Valterra Platinum.
What are you looking to do in terms of value? Like, where are you investing in to ensure that you get the most value within this new spinoff?
Yes, so as I said, we've got an incredible endowment in multi-decade life assets in the PGM sector. The assets that we have are really world-class, and therefore our opportunity is to extract the value from our existing asset base. And so we're focused around continuing our exploration at Mogalakwena and potentially going underground at our Mogalakwena mine, which has a life in excess of 80 years. We're also focused around extending the life of the mine at our Mototolo operation on the eastern limb in South Africa, and then also how we extract further value from debottlenecking and optimizing our processing assets. And we're looking to repurpose one of our smelters in order to continue to treat material that we have. And that's where our key focus is, in addition to not only coming back to that operational excellence and ensuring that all our assets operate sustainably in the lower half of the cost curve, and then continuing to generate positive cash margins even at the low point in the price cycle.
Well, I'm glad you brought up the price cycle, because last week we did see platinum prices enjoying a bit of a rally. How do you see the broader context of what we're seeing, the macro conditions affecting the business right now, especially as you're looking to the spinoff?
Yes, so we're in the mining industry, so price volatility and PGM volatility is a fact of life. And we've certainly seen the PGM prices rise from 2021 and 2022, and they've come off those highs in 2023. And so we see that volatility continuing, predominantly driven by macroeconomic market uncertainty, as well as just some general sentiment around PGMs. But importantly for us is what we can do as a business is really focus on what we can control. And that's how we deal with that volatility. So therefore, focused on our cost optimization program, capital efficiency, where last year we delivered 12 billion rands of cost and capital savings. We've got another 4 billion rand program, certainly places all of our assets in that lower half of the cost curve. But in addition to that, so not only through operational excellence, just how we then maximize the revenue from the minerals that we mine. So not only are we focused around PGMs, but we're also focused around chrome, our base metals from nickel and copper, and we also produce gold, which also certainly in the current price environment helps support our cash flow margins as a business.
So you believe right now current market conditions are actually beneficial to the business bottom line? Is that what you're saying?
So I fundamentally believe that PGM prices should be higher than where they are today, just given the deficits that we see within the market and a positive outlook for PGMs, given sort of the changes in the nature of the energy transition. And so certainly, I think, once we have greater stability from a global macroeconomic perspective, you'll see sort of prices recover. But that being said, I really focused around what we can control. And we're also, as a company going forward, focused around market development. So how can we diversify the products that we mine and sell to a broader market, and how do we think through that energy transition as well? So can we play our space? Can we play in the space of hydrogen, both generation and also mobility? How can we think about our role in sustainable fuels? And also, how can we use batteries? How can we use PGMs in battery technologies? And all of those aspects, we as Valterra Platinum will continue to invest in and look for those new diversified markets.
So does EV, electric vehicles, ultimately get in the way of those future aspirations? Because a lot of your metals are based on gasoline and diesel products.
So certainly, EV, pure battery electric vehicles today don't contain any PGMs. And we're looking at how do we then opportunities where PGMs can be used in the future in battery technology. But that being said, I think the energy transition is going to take us a lot longer and it's a little bit more a little bit different to how we had sort of planned out 12 months ago. And as a consequence of that, PGMs have a positive role to play in hybrid vehicles, as I said, in hydrogen and the generation of hydrogen, but also importantly, looking for other markets where we can utilize PGMs in other industrial applications, such as we can continue to see that demand for PGMs into the future.
Right. Certainly an interesting time for the PGM market. Appreciate you joining us, though. Craig Miller, CEO of Amplats and also Valterra Platinum, joining us just before he heads to the Johannesburg Stock Exchange. Thanks so much, Craig. Now, SpaceX has suffered a third straight setback for its Starship program. A test flight has seen the massive rocket booster explode before the Starship itself suffered a leak, tumbled out of control, and disintegrated as it hurtled back to Earth. It also failed to deploy dummy satellites as planned. CEO Elon Musk did not deliver a planned speech to staff after the launch, but he focused on the positive in a post on his X platform, saying the outcome was a big improvement from last time. And coming up, chaos erupts in Gaza as Israeli forces fire warning shots amid desperate scenes at a food distribution center. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Chaos has erupted in Gaza on the second day of aid operations by a new U.S.-backed group. Desperate Palestinians overwhelmed a center distributing food, breaking through fences. The Associated Press is reporting nearby Israeli troops fired warning shots, sending people fleeing in panic.
We worked out a plan with our American friends to have controlled distribution sites where an American company would distribute the food to Palestinian families. It's not a truck with flour bags. It's a package for food for a family for a week. You come and you get it. Very hard for Hamas to steal it, especially because we guard these positions.
Joining us now is Bloomberg's managing editor for Middle East and Africa, Paul Wallace, joining us in Dubai. Paul, what could this mean for future aid operations and distribution?
Hi, Jennifer. Well, these operations certainly have not got off to a good start. As far as we know, Israel and the entities running this U.S. and Israeli-backed program have opened one distribution center, and we've already seen that chaos that erupted yesterday when Palestinians, many of whom are desperate for food and medicine and other supplies, overran the center, resulting in the Israeli army firing warning shots. The Israeli authorities said that the distribution center was back up and running as normal a short time afterwards, but I think it just goes to show how complicated this issue is, especially when aid is not being dispersed on a big scale, the scale that the likes of the UN says is necessary at this stage. And I think it's quite likely that the incident that you saw yesterday will be repeated in some form over the coming weeks.
And sticking in the region, Paul, we have some reporting that suggests Germany potentially weighing a curb on arms to Israel, despite what we've seen over the past few decades with both countries. What could this mean for these two countries, and also more broadly about European countries and their own involvement with the Israeli troops?
I think this is a very significant move by Germany to consider banning weapons exports to Israel. In practical terms, even if Germany does take that step, which it hasn't done so far, and who knows how long it would take the German government to decide, but in practical terms, there wouldn't be a short-term impact on the IDF. Yes, Germany is one of the biggest suppliers to the Israeli military, but you know, the US is by far the biggest, and then you've got the likes of Italy and Germany coming some way behind it. There's a lot of symbolism, though, behind this too. This is not just any country or any European country that's taking a firmer line against what Israel is doing in Gaza. It's Germany, which for obvious historical reasons has been very reluctant to criticize the Israeli government, including since Hamas's attack on Israel on October the 7th. But now it seems like Friedrich Merz, the new chancellor, is going to take a more critical line, and it shows how pressure is rising on the Israeli government, essentially to end the war in Gaza. Obviously, Israel's main ally is the US, and for now, the US seems to be backing Israel's overall strategy. But it's very, very clear that in the last 2 weeks, things have changed, and pressure is being ramped up on the Israeli government by the Western world.
That's right. Paul Wallace, Bloomberg's managing editor for Middle East and Africa. Paul, thanks so much for that updated report and for joining us. Now, coming up, South Africa-U.S. relations. President Ramaphosa defends the nation's empowerment laws and laughs off his bilateral meeting with counterpart President Trump. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. South African President Cyril Ramaphosa has defended laws aimed at uplifting the country's black majority and says he is, quote, baffled by suggestions that they are stifling economic growth. Answering a lawmaker's question in Cape Town, Ramaphosa referred to the World Bank and IMF studies, which found a large chunk of the economy remains in the hands of a privileged minority. For more, Bloomberg's Andiro Oganga joins us in Kigali. Andiro, President Ramaphosa also laughing off that meeting that he had at the White House last week. Share a bit more about what we heard in Parliament yesterday.
Hi, Jen. Just a precursor to Parliament, President Ramaphosa was attending an infrastructure conference in Cape Town, and when he came in, the lights were dimmed. And when he took the stage, he jokingly said, "Is it happening to me again?" referring to his interaction with President Donald Trump in the White House last week, where President Donald Trump said, dim the lights, and he played a video and went ahead to try and show evidence asserting that there was white genocide in South Africa, allegations that have since been widely debunked in the country. But President Cyril Ramaphosa downplaying what many have termed as an ambush, saying that when the cameras were away, they had a really productive conversation on prospects of trade deals, relations between the two countries, and also diplomatic standing. But when he went to Parliament is when he drilled down on the core issues from the visit, one of them being the bone of contention between him, Elon Musk, and President Donald Trump, where they are saying that these black economic empowerment laws are racist towards white Afrikaners, and they're also unfair. President Ramaphosa says that there's nothing unfair and racist about trying to empower black people in the country. If anything, it's not the problem. The problem is the production means in the country fairly and squarely falling in the hands of a few who are the minority in the country. But all in all, he acted like a seasoned politician. When he was abroad, very polite in his mannerisms, took every jab with a lot of grace just to ensure that he gets some economic mileage. When he came back home, of course, he's a politician. He roared just to maintain political momentum.
Right. And if you live here in South Africa, as I do, the relations between these two countries are really front and center. What do they look like going forward?
If you listen to President Ramaphosa, it looks like things will be looking up. The goal here is to keep the channels of communication open. But also, South Africa is at a very critical point. They need to keep these relations because U.S. is the second largest bilateral trade partner after China, yet there's this 30% tariff that has been slapped on them in an economy that is growing very slowly. If you look at the last decade, growth has been dismal. The fourth quarter of 2024, growth was only 0.6%. To mean they're not creating enough jobs to close the unemployment gap. Inequality is still high. So they need to keep these channels of communication open. President Ramaphosa was alluding to prospective deals on LNG imports and also exploring critical minerals in South Africa. But outside of that, they're trying to also solve their problems internally. He says Treasury has earmarked 1.03 trillion to go into infrastructure. But what they're doing technically is playing catch up. After years of underinvestment and mismanagement, they will need 1.6 trillion rand from the public sector and about 3.2 trillion rand from the private sector. And this is where that relation with the U.S. come in, because these are places that they could go to source for funding from investors. So they need to keep these relations in good standing.
Great reporting as always. Bloomberg's Ndiro Oganga in Kigali, Rwanda. Ndiro, thanks so much for joining us. Now coming up, Nvidia reports later today. We get the details on what to watch for next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks track Wall Street's biggest rally in more than 2 weeks. Sentiment boosted by a rebound in U.S. consumer confidence and easing trade tensions. Nvidia is set to report earnings later today. Investors watching for clues on how China chip curbs are affecting AI demand. And a fresh setback for SpaceX's Mars vision after its Starship rocket loses control and disintegrates during a test flight. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zapasaja in Johannesburg. Let's just take a look at where markets are positioned. We mentioned we did get a boost from consumer confidence in the U.S. On Tuesday, but it is a big day today with Nvidia earnings coming up later today. If we take a look at U.S. equity futures, a bit flat right now, marginally lower, but coming off of a strong session on Tuesday for most of the major indices. We did see NASDAQ closing at more than 2%, the S&P also snapping a 4-day losing streak, but a bit of sentiment clearly weighing on the NASDAQ futures right now. We did see sentiment, we mentioned U.S. consumer confidence, bouncing back from a near 5-year low. The 10-year yield in the U.S. also in focus. We did get news just a few minutes ago though, about the auction of Japanese bonds right now. That, of course, the initial announcement on Tuesday having an effect on global bonds, sending bonds higher. But right now, we're seeing the yield, the U.S. 10-year yield at 4.47% there. The dollar, though, stronger right now, advancing against most of its group of 10 peers. We're watching very closely on how tariff concerns and also more broadly about fiscal concerns globally are affecting the dollar and currencies globally. And Brent crude also tracking equity markets a bit higher right now, up by about 0.5% ahead of a key OPEC Plus committee meeting coming on Saturday, where we will get some policy directions from the group. Brent crude right now at about $64.39 a barrel. And a quick look at the S&P bounce. We mentioned that the indice was one of the few that did close stronger on Tuesday, snapping a 4-day losing streak. And also, as this chart is showing, bouncing off its 200-day moving average, and in doing so, returning to positive territory on the year there. So that is a quick check at where we saw U.S. equities on Tuesday. Now, let's just bring you some breaking news that we are following this morning. We've been talking all morning about the auction of 40-year government bonds in Japan right now. The latest indication is that we're seeing the demand is the weakest since July, and the Japanese 30-year bond, yield rose 10 basis points after that weak 40-year bond auction. This is, again, going to fuel concerns about volatility in global debt markets. We did hear from the finance ministry on Tuesday speaking and actually putting out a questionnaire to market participants about what it is and what appetite they have for the bond market right now. But clearly what we're seeing is a bit of weakness, and that potentially could have a spillover into global bond markets. But right now, that is where we are seeing the Japanese 30-year bond yield landing right now. All right, let's turn to our other story, top story for today, and that is Nvidia earnings. They are due tonight. The tech giant is expected to deliver another boost to its GB200 chip production and Tier 2 cloud sales. For more, we're joined by Bloomberg's Charlie Wells, who's in London. Charlie, what are analysts set to focus on from Nvidia today? This is the last of the big companies that are set to report.
Jen, we have been eagerly anticipating this report for a long time now, given a lot of changes that we've seen in the economy and in the tech space. Now, analysts are expecting a pretty strong quarter to be reported from Nvidia, and we're also expecting to see some fairly strong forward guidance on that core chips business, so revenue potentially growing over the next 4 quarters. But what we're really listening for here are some key themes that have really been in the market over the past few weeks. And one of those is just about that AI ecosystem. How profitable does it look like it could shape up to be? How much are companies continuing to spend on a lot of this AI infrastructure? As we know, they've been slowing down a little bit on some regard, but we want to see if there has been a boost recently. But one of these main themes, and I think where we're really looking for more information, is on China. So we do know that Trump banned Nvidia from selling its H2O chips to China in April, and Jensen Huang, the CEO of Nvidia, has had some fighting words about a lot of these export controls. He's talked about a write-down of $5.5 billion related to those export controls. But what investors really want more information on is the potential that Nvidia might sell other lower-powered chips to China. So that could be some helpful information that comes out later today.
Do we know whether this report today, Charlie, could affect the trajectory of the company's share price, especially if you consider it in the broader context of some of those other themes you were just mentioning there?
Yeah, well, you know, over the past few weeks, Nvidia stock has been on an upward trajectory, and so a positive report could really help that movement. There is a lot of cash sitting on the sidelines right now. One BBVA analysis put that there's about $7 trillion in these money market funds. So there's a lot of potential dry powder there. Now, options data is showing that we could see a post-earnings move of about 7%. So again, there could be a swing to the upside or the downside. So we are really waiting to see how this comes out, because this really is a bellwether stock, not just for other tech stocks, but for the U.S. stock market more broadly. So we should get a really interesting read when they report after the market closes in the U.S.
Yeah, a lot to look forward to. Bloomberg's Charlie Wells in London. Charlie, thanks as always for joining us. And we should note we'll be speaking to Nvidia's CEO Jensen Huang for a live reaction to those earnings later today on Bloomberg TV. Be sure to check that out. Let's get back to the markets. A global index of stocks is inching towards all-time highs as Asian shares track the S&P 500's Tuesday rally. The next catalyst, as we just mentioned there, will be Nvidia's earnings report due later on Wednesday. Joining us is Gareth Nicholson, CIO and Head of Managed Investments at Nomura International Wealth Management. Gareth, thanks for joining us. Before we get to Nvidia, let's just get your reaction to what we did see in Japan from this 40-year bond sale. Weakest demand in quite some time. What could this mean more broadly for the global bond market?
Well, Jennifer, I'll be honest, I think that's the biggest, more medium-term story that's going on now. As you know, 30-year, the longer bonds, they are not the speculative buyers. These are the insurance players, the asset managers, the big corporates, the governments. These players are not speculative and are looking to change their structural asset allocation quickly. So what that means is when they decide on a trajectory, it's going to stick around for some time. And clearly, they are highlighting that there needs to be a term premium. There needs to be a higher return for a longer dated bond than there is for shorter. And as we know over the last few years, we've had a pretty flat curve that is changing. We're seeing more stress on the long bonds in Europe, UK, Japan. And we think this is going to continue. And this auction just highlighted that there's a lot of uncertainty in this investor base. They are really looking at these numbers and trying to understand, am I getting paid for this risk? Clearly in Japan, they thought they weren't getting paid enough for this long-term risk at the moment. And the uncertainty from the central bank added to that.
Why aren't we seeing this spill over yet, though, Gareth, into other assets? Do you anticipate that will come in time? Well, this asset class moves pretty slowly. As I said, the investors are longer term in nature. I think particularly around equity and some of the other asset classes, it's a little bit more shorter term. We're already focusing today on Nvidia. That's going to be interesting headlines for the next few days, and then that maybe will shift. I do think longer rates will have an impact, but it's going to be slow moving. We're going to have to see maybe a few more auctions struggling. We're going to have to see the yields cross some pivotal points in other parts of the world. Europe potentially still lagging when it comes to yields moving up. And we want to see what the big players are going to do. So yes, it's a very important factor for the medium term. In the short term, I think markets are still focused on other drivers. Yeah, we're looking at U.S. equity futures marginally down right now, but we did say Tuesday was a strong day for most of the U.S. major indices. How much is weighing on this Nvidia earnings for general sentiment around the equity markets, in your opinion?
Well, I think the sentiment in equities generally is a case of we have a few weeks, maybe months, given this 90-day reprieve, to look to position. We're already seeing orders go through. We expect lots to happen to front-run potential tariff escalation. So we are seeing sentiment move in the right direction. We've recently seen some of the softer sentiment turn relatively positive. So the markets are looking for positives. As you highlighted earlier on, we hit the 200-day average and the market bounced off that. That is a relatively good technical signal. Now, if Nvidia comes out positive and some of the hyperscalers are talking about positive numbers, from a macro perspective, this is constructive. And we think the tailwind, the momentum will continue. But this is still quite tactical, quite short term at the moment. It is not something you want to buy, turn your screens off and go on holiday. This is definitely active management, actively looking at where to manage this risk.
Outside of the U.S., Gareth, where are you focusing on managing your risk?
Well, I think the idea is the U.S. has become such a key component for the last decade of investors' portfolios. Many portfolios are above 80%, some of them 85, 90. We think given the dollar weakness, given we still think the dollar is going to struggle in this environment, we should be looking at diversifying into other strong big economies. In Asia in particular, we like Japan. We think this is an environment where there's lots of conduciveness from the stock market, from the companies, from the government. Japan is definitely an area that's going to continue to improve. You've got other areas in Asia which are coming off a low. China, from a tactical perspective, still shows a lot of attractive valuation. We're seeing initiatives from the government to stimulate the economy, and these are starting to show signs of support. So we are seeing a number of the big economies in Asia as destinations for diversification. So we're seeing investors with big overweights in the US reduce those slightly and start moving to other areas where they can get more predictable income in this environment, predictable growth. So exciting rotation trade. Rotation trade is definitely live and kicking.
Is there still concern, though, Gareth, from the clients that you manage? Where is their number one concern right now?
Number one concern is they like predictable income. I mean, they've liked this idea of banks on the front end offering a very decent predictable income at 5-odd%, and they've liked the predictable growth from tech. Now, both of those are under certain headwinds. We're seeing banks potentially looking to cut their deposit rates, and tech is not as solid as it was a few years ago. So this unpredictability, this uncertainty is driving them to change their portfolios. And they're really looking for assistance to do this, where they're going to move, how quickly should they move, what is the catalyst for this. So there's a lot of unease, we believe, investors. This volatility creates opportunities for new entry levels, and we're seeing a lot of active management at the moment, particularly out of this rotation trade, trying to build a little bit more resilience in their portfolios.
Really fascinating insights there. Gareth Nicholson, CIO and Head of Managed Investments at Nomura International Wealth Management, joining us there in Singapore. Gareth, thank you so much for your time. Now, here's a look at some of the other stories we are following this morning. The U.S. government is said to be poised to receive a so-called golden share in U.S. Steel as a condition for approving Nippon Steel's acquisition. Sources say the plan would give Washington de facto veto rights on certain company decisions. The scope of the veto powers remains unclear. President Trump announced a partnership for the deal last week, including $14 billion in new investments. Also, TSMC says it's opening a chip design center in Munich as it works to establish a bigger footprint in Europe. The new site will support European customers and complement TSMC's first European semiconductor fabrication plant in Dresden. It's set to open in the third quarter of the year, but the company did not give details on the cost or required headcount. Now, coming up, U.S. embassies ordered to stop scheduling interviews for student visas as the Trump administration steps up its fight with universities. More on the impact next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The Trump administration is raising the stakes in its ongoing battle with universities. Secretary of State Marco Rubio has now ordered U.S. embassies worldwide to stop scheduling interviews for student visas. Bloomberg senior editor Derek Wallbank is joining us now. Derek, this is quite significant if this actually continues. Talk about the latest on this battle between the administration and these U.S. universities and what this means for student visas.
Well, Jennifer, thank you so much. I'm sitting here in Singapore, and right now is the time when a lot of students start booking their visa appointments with the U.S. Embassy here in preparation for the fall semester. The offers of admission have gone out, in many cases have been accepted, and now a lot of students right around the world are wondering what's going to be happening here. Will they be able to go to university at all in America like they have in many cases hoped and dreamed about for years and years and years, and their parents for maybe even longer than that. So this is a really big deal. It's hard to overstate the amount of business and political leaders around the world who have been educated in the United States. It is a massive soft power advantage that the U.S. has when it comes to its rivalry around the globe with China, as well as some other nations. It's also been a really big draw for the United States when it comes to importing foreign talent. Some of the best students go to the U.S. for education and then don't leave. And they start companies or they get hired at companies and they go on to do that. So So this disruption, is it going to be temporary? Is it going to be something longer? I think that's a critical question on a lot of minds right now. But at the same point, this goes in as part of, as you quite rightly mentioned, a larger campaign that the United States government under the Trump administration has to kind of reshape higher education in the U.S.
Yeah, and Derek, if you just take a look at even the tuition that is paid by foreign students going to the U.S., it's also a boon for universities and more broadly the industry. Can you just talk about the soft power play, though, Derek, just a bit, and what could that mean for the U.S. moving forward?
Well, certainly. Let me sort of take where my feet are planted right now as a great example, right? The Prime Minister of Singapore, elected with a 65% of the vote mandate, he has a degree from Harvard. His predecessor, who never won an election by less than 60%, he has a degree from Harvard. And the president of Singapore, who was elected with 70% of the vote, he also has a degree from Harvard. This is a place where the cream of the crop students aspire to Harvard. That's a place that they want to go. And when you're talking about across, Singaporean society, you take from Harvard to Princeton to Yale to all down the line, you really do get a lot of students. You measure it all in the thousands who come to the United States for education. And all of that sort of, as I mentioned, it translates throughout society. So when the U.S. is sitting there talking to the new Singapore Prime Minister, for example, as they're closely courting him in the U.S.-China fight, even though Singapore says it wants to remain non-aligned, they are talking to a guy who has a degree from the University of Wisconsin, then the University of Michigan, then Harvard, right? That's where his education is. That means that he will have had experiences going to campus, going to football games in Madison, going through Ann Arbor and all of that entails, then going to Harvard for that flagship, experience at the Harvard Kennedy School. You can't buy that sort of time with a world leader in their formative years. It's really, really difficult, and it's an experience that the United Kingdom has enjoyed for years and years with Oxford and Cambridge and the LSE and many others. The U.S. currently enjoys now with an overwhelming advantage among the top 100 world universities, no matter what list you look at. And it's been a major soft power play. So I think to a degree that maybe the United States doesn't fully appreciate, this fight is resonating in the halls of power and in the Wall Street equivalents from Raffles Place through to anywhere else you want to look at all the way around the world.
Right. Yeah, really great to have you outlining that. Perfect person to do so. Derek Waldbank, Bloomberg senior editor, joining us there. Derek, thanks as always. Great to have you. Now, coming up, turning away from the U.S., our big take looks at how Asian investors are behaving to President Trump's trade war. We're live in Singapore next. This is Bloomberg. President Trump's efforts to remake global trade by bringing factories back to the U.S. is threatening $7.5 trillion worth of investments from Asia. That's the subject of today's Bloomberg Big Take. Senior reporter Ruth Carson joins us now from Singapore and is also one of the authors of this report. Ruth, just explain for us how Trump's policies are really turning U.S. markets into a source of volatility and real pain for Asian investors.
Yeah, it's an incredibly important story to tell and unpack here, because we have to remember that for decades, Asian exporting countries have just amassed trillions and trillions of dollars worth of U.S. investment spending, treasuries, stocks, credit, right, pumped into the USA. But because of Trump's policies, because of his efforts to basically rewire global trade and the U.S. economy, there's now a massive global rethink of is there an over-reliance on US assets in this part of the world? So that is happening across all levels, spanning family offices over here who, are freezing investments in the US or cutting investments there. We've got, life insurers in Japan going, we need to find alternatives to treasuries, and others like, for example, pension funds in Australia who said, you know what, we've seen the peak. We've seen the peak in US investments, because there is just so much money tied up there. And the way things are going with global trade, maybe it's time to diversify. And that's what the story is about and what's at stake.
What is at stake, Ruth? What are the assets potentially that are the most concerning here?
Yeah, absolutely. And that's critical to unpack as well. Treasuries, obviously a huge one. We know that foreigners do hold a sizable amount of treasuries. Some of the biggest foreign holders of treasuries are in this part of the world, Japan and China being two of the primary ones. US stocks as well. And not to mention the dollar. Remember, the dollar is on 88% of all global trades out there. And Asia's a big part of that. So we've seen explosions in markets stemming from, the Asian time zone as that rethink happens, and it impacts everything, not just the US assets. Take, for example, the Taiwan dollar. Earlier this month, we saw an explosion there, some of the biggest moves since the 1980s in a matter of hours. And that obviously impacted the dollar in a very, very large way, because it's the other part of the trade. We also see we saw treasuries really selling off, in the aftermath of the April 2 tariff announcements. Again, that was when speculation was rife. Are foreign holders actually ditching some of the treasuries investments? All the money managers, or the head of trading desks that we've spoken to for the story, and there are a lot of them, are saying that, this unwind is just beginning, so brace for more.
Really great reporting there. Bloomberg senior reporter Ruth Carson in Singapore. And subscribers can read Ruth and the team's big take piece on Asia's de-dollarization on the terminal right now. That is it for Bloomberg Horizons Middle East and Africa. Stick with us for Daybreak Europe next. This is Bloomberg.